Many brands are starting to wonder if China might no longer be the hot market for luxury brands that it used to be. After years of disappointing sales growth, some brands are turning their attention away from China and towards markets which they think might be the next big thing. While the China market has certainly faced challenges, there are still huge opportunities there for brands that know how to read the market. I'm Jane Singer, and welcome back to A Seat at the Table. It's a pleasure to have you as part of our worldwide audience that now reaches exceptional people like you in over 140 countries. Today we're joined by Jacques Roizen, Managing Director, China Consulting at Digital Luxury Group. He's worked with leading international brands including Pandora and Etam to help them grow their China business. He'll be sharing some of the big opportunities that brands are overlooking when they look at the China market. He'll also be talking about why so many Chinese consumers shop overseas and the unique role of luxury retail in China. Before we get started, if you're looking to learn more about retail opportunities in emerging markets, then you might want to take a look at Inside Fashion. Each month, you get fact-filled, concise updates on developments in retail markets. Plus, you get a sharp view of critical developments in the global supply chain. To learn more about Inside Fashion, go to insidefashionlive.net. I'll also leave a link for this in the show notes. Now let's sit down with Jacques and find out about growth opportunities in China's luxury market. Jacques, I am delighted to have you with us here on A Seat at the Table. I know we've been talking about some of your observations and analysis of what's happening with the luxury market, particularly with regard to China. And I think that you have a lot of very interesting observations and a lot of interesting things to unpack.
Well, thank you very much. I'm delighted to be here and to have this conversation with you today.
Yeah, I think that if maybe we can just start by talking about some of what you see as perhaps misunderstandings about the state of luxury goods in China right now. I think that most of the narrative is that the China market has been underperforming and that that's been, very difficult for luxury brands in terms of their overall performance. What are you seeing around that?
I think there's something wrong in the narrative, and I'm happy to give you my perspective on that. But overall, the luxury market globally is extremely dependent on China. The Chinese consumer makes up for arguably the largest proportion of consumers for the luxury industry. And so as a result, understanding the Chinese luxury market is critical, and the performance of the luxury market in China is critical. However, there's been I believe, disproportional focus on the performance of luxury brands inside China. And the reason why I'm saying at the same time, the Chinese luxury consumer is essential, and we shouldn't focus too much on the performance of luxury brands inside China, is because the Chinese luxury consumer is a consumer that historically purchases most of its luxury goods outside China. If you go back to 2019, Chinese luxury consumers were responsible for 84 billion euros of luxury consumption.
Wow.
But 67%, two-thirds of that number, were purchases made by luxury consumers outside China. Meaning, Chinese consumers were buying 84 billion, but they were only buying 28 of those 84 billion outside China. 28 billion inside China, and the difference, the 56 billion outside China. Okay, so when you factor that element, and then we had to deal with the pandemic, and during the pandemic, as you know, Chinese consumers were not able to travel, and so we found ourselves in a situation where the 28 billion that they purchased in 2019, which used to be one third, Now, all of a sudden, in 2020 and in 2021, almost 100% of their luxury consumption was taking place in China because they had no other alternative. And so we saw the domestic luxury consumption in China really pick up. It grew by 54% in 2020. It grew by another 30% in 2021. So we reached 56 billion euros of luxury consumption inside China, which is literally double what it was in 2019. And that's why all the luxury brands started talking about the explosive growth of the Chinese market. The challenge is that 56 billion is still far below the 84 billion that Chinese consumers were purchasing between their consumption inside China and outside China. Now, what happened in 2022 was that there was a contraction related to the fact that we had lockdowns in China. And so we went from 56 billion of domestic consumption to 51 billion. And in 2023, it bounced back. The problem is that it bounced back by 12% from 51 billion to 57 billion. And so that's when people started talking about a slowdown, because we had experienced a 54% growth in 2020. We had experienced a 30% growth in 21. And so the 12% in 2023, which put us 57 billion versus 2021, 56 billion, was barely above. And people were expecting high double-digit growth. And that's why we started talking about a slowdown. What's ironic about that is two things. The first one that I was mentioning earlier, which is, when did we started talking about explosive growth? When the industry actually lost a third of its Chinese luxury expenditure as a result of the fact that the growth domestically did not fully compensate for the disappearance of Chinese tourists outside China. And the second irony is that in 2023, because the borders reopened, Chinese consumers started resuming consumption of luxury goods outside China. And so while indeed luxury consumption inside China grew only by 12% from 51 billion in 22 to 57 billion in 2023, what we saw is that globally, they started purchasing 31% of their luxury goods outside China again in 2023, for a total consumption by Chinese consumers of 82 billion. And when you compare the global consumption of Chinese luxury consumers in 23 versus 22, we actually grew 52%.
Wow.
So that means that, when did we start talking about an explosive growth? When the industry lost a third of its Chinese revenue. When did we start talking about a slowdown? When the industry recorded a 52% growth in luxury expenditure by Chinese consumers. So that's where the irony is. That being said, to the core assumption of your initial question, there is a contraction in China. I think everybody was planning for a contraction of the domestic consumption as a result of the resumption of travel. But the idea was that it was going to contract slightly domestically, and that it was going to grow very significantly outside China. And the reality is that this year, in 2024, what we saw is a contraction of about 20% in China domestically, and a growth outside China that is far below the type of growth that people were expecting. And as a result, the total market, the total share of Chinese revenue, whether it's in China or outside China, is actually down, according to our projections, by 13% this year.
Wow. Interesting. Now, I think that, some of what you have said about the nuances of Chinese luxury purchases, the fact that so much of it is done outside of China is really interesting. And of course, we've seen that similarly in other growing economies because initially you don't have as much grade A retail space. Brands are not as set up in the nation. So people do have to go outside. But China has had this situation for a very long time. And you do have a lot of grade A space now. There's been a lot more development of retail. What do you see? And of course, there's been the development of Hainan and other domestic duty free. Looking at the shopping pattern, how do you see that playing out going forward? Do you see that some of those purchases or a lot more of those purchases will start to be made domestically in the same way that they are in other developed nations? What are you seeing around that? We're going to take a quick break now, and then we'll be right back.
We were hiring when we were making 50 to 100K monthly losses.
And why? Welcome to episode 1.
I can't think of a single founder who's been around for a decent amount of time in business who hasn't had their tunnel of year. This was that year. We're going to be okay, yeah, Sheree. Some are going to hear this and think, you TDP. But hear me out. You only have to do the math to understand that very soon we were $500,000 down.
So it's a very interesting question because, as I mentioned at the beginning of this conversation, pre-pandemic, Chinese consumers were spending 2/3 of their luxury expenditure outside China. This year, we're closer to 40%. Several top-tier consulting firms issued over a year ago reports that included a projection that implied that because of 3 years of pandemic and new habits formed, because of the expansion, as you were mentioning, of the number of stores by luxury brands inside China, that we wouldn't go back to a proportion of 33-66. I actually believe that we will come back very close to that. I still believe that 60% of the luxury expenditure by Chinese consumers will end up over the next few years going back to at least 60% outside China and only 40% inside China.
Why is that?
For many reasons. First of all, culturally, there's a from a behavioral standpoint, Chinese consumers associate the purchase of luxury to travel and vacations. So it's a part of the experience when you travel. Okay. The second point is the obvious price arbitrage. When you're abroad, as a result of of two things, you're facing better prices. So I'm not talking about duty-free opportunities, but beyond duty-free, you've got a price arbitrage that is often very significant. We've seen, the Japanese market grow very high double-digit last year and this year, and that was fueled mostly by Chinese consumers. When I was in Tokyo last August and the year before, when I visited luxury stores, a very large proportion of the consumers inside those stores were Chinese consumers. Because today, you can still find products that are, 20 to 40% cheaper in Tokyo versus Shanghai. And so there is an element of tax, but there's also an element of actual price harmonization that's lacking in the industry today. Now, price harmonization, is a complicated. It's a very simple topic to discuss. It's a very complicated topic to address. First of all, to the point of the footprint of luxury stores inside China, there's a statistic that I love reminding. everyone, which is more than half of the new luxury stores that were built by the luxury industry globally in 2020, 2021, and 2022, more than half of those stores were opened in China. So by definition, luxury brands have made big investments in China and have to recover their investment. And in 2020, 21, 22, Chinese consumers couldn't travel. So there was no real, urgency to address the challenge of price harmonization because people didn't have the option of buying somewhere else. The second element is now that people are traveling across the world, you would think, okay, then now obviously logic dictates that you want the same price everywhere. The problem is that making these changes have, in the real world, have real big consequences. If you raise your prices in Tokyo because the currency has created a price arbitrage, you're going to very quickly alienate the local consumer in Japan because you're going to outprice them. If you decrease the price in Shanghai, you're going to significantly impact the margin and therefore the profitability of luxury brands in one of their biggest markets in the world. So, price harmonizations is one of these things that's very simple to discuss, very simple to understand, very difficult to address. And even when you address it, you have to do it very slowly. And so we're seeing movements, we're seeing brands that are, going in that direction, but you have to do it very progressively.
Right. I think I understand what you're saying. And certainly Japan has benefited from the point of view of retail to tourists from having a very weak yen for a long time, which is, like you said, given a tremendous advantage to people going and shopping in Japan. But that doesn't last forever. In terms of people who are trying to develop the domestic side of things, do you feel then that, you said that brands have invested a lot in opening up stores in China, and yet at the same time, most people are shopping, or at least, as you're saying, 2/3 of the people are buying overseas. So beyond the pandemic, which we know is past, what's motivating brands to continue to open more stores or not close some of the ones that they have if most of the shopping is done overseas?
So I think, first of all, during the pandemic, there were two things going on at the same time. The first one is, as we mentioned, the Chinese consumer was captive. And so therefore, to a large extent, there was a huge opportunity to benefit from the growth of the domestic market. The second point is, to a large extent, the number of stores luxury brands had in China pre-pandemic was relatively small compared to the size of the market. Today, there are very few examples of brands closing luxury brand stores. What you're seeing is brands are no longer, to a large extent, really investing in the capex of opening new stores. They're investing in marketing,
right,
but they're not trying to grow their footprint.
Interesting.
And I think this investment in marketing is a super important topic, because when you look at brands and you wonder, how are they going to fare globally, and in particular with Chinese consumers in China and outside China, one of the criteria has to be, how are they investing from a marketing standpoint inside China? Because regardless of whether she buys in Shanghai or in Tokyo or in Paris, the Chinese consumer lives in China.
Right.
And if you want to create desirability and brand awareness, you're going to have to market to her in China. And that's why, as recently as the beginning of December, you had Chanel hosting their Métiers d'Art fashion show in Hangzhou. As recently as September, you had Christian Dior opening a fantastic exhibit in Beijing, because you need to stimulate demand in China, regardless of where you think consumers are going to spend.
I think that's a really interesting point. What are you seeing in terms of some of the different ways that brands are marketing in China? What are they doing that may be, compare and contrast to what the same brands might be doing, in Paris or in New York or in Tokyo or wherever?
It's a little bit difficult for me to answer the question because my focus is almost exclusively on what brands are doing in China.
Okay.
So I wouldn't be able to compare. But what I can tell you is that in China, a lot of luxury brands are making investments in order to stimulate demand. Last summer it was a massive exposition that was very well received by Loewe. Between July and November, there was a beautiful retrospective of the work of Gabrielle Chanel called Fashion Manifesto in Shanghai, on top of the fashion show that I mentioned at the beginning of December. It's very, on a regular basis, you see the leading luxury brands do spectacular things in China in order to stimulate demand. Tiffany hosted a beautiful high jewelry event called Blue Book at the end of last year. In the first half of this year, they hosted a fantastic second high jewelry event. These are the kind of investments that are defining the brand equity and its desirability in China.
Yeah, interesting. I think that, if I'm understanding you correctly, then a lot of what's going on in China is less about driving domestic sales, even through the retail. The retail is build a spectacular flagship to create more or less the demand, which then will be met when people travel overseas. But building a monumental flagship or having, like you say, some of these installations or events create that excitement around the brand, knowing that people will most likely make the purchase overseas.
Yeah, I wouldn't go as far as saying that those flagship stores are not meant to make a difference from a revenue generation standpoint locally. But, I would argue that second to the New York flagship of Tiffany's, the most spectacular Tiffany's store I've seen in the world so far is the one they opened in Shanghai last year, which is, just mind-blowing in terms of a spectacular statement of an elevated brand with a lot of, with a big focus on high jewelry.
Right, right. Yeah, I think it is interesting to see what's going on in China in terms of, like you say, the investment in building very beautiful, very elaborate, very unique in many ways, retail flagships that you're not seeing even in other key markets. I'm just curious from your point of view, when you look at China, China has had this, huge amount of luxury spending attributed to them, and it looks like that will maintain. How much do you see in terms of growth? As we were talking about before, China's grown so fast, and you can't expect to have year on year on year exponential growth. So when you're looking ahead, what do you see as potential trajectory?
Well, first of all, let's frame things in terms of desirability. While there's been a contraction in 2024, I want to be very clear. We believe that the desirability by Chinese consumers for luxury goods has never been higher. The fact that today she chooses to not allocate her disposable income to luxury goods, or to a lesser extent than she did in the past, doesn't mean that the consumer is not dreaming of these luxury items. At the end of the day, the value proposition of luxury includes, the appeal of a brand heritage, the appeal of unique craftsmanship, the ability to reward yourself with something that is truly exceptional. And these things very much match the DNA of the Chinese consumer. And so I don't think luxury brands have a desirability issue in China. Right now, they're suffering from the fact that the consumer confidence is lower than it has been historically. And as a result, consumers are being more prudent. Okay. When you look at when discussing the outlook for the years to come, I think we're going through a period of time that China has essentially never experienced, or not in recent memories. In Europe, in North America, consumers know that there are some good years and there are some less good years. In China, for the last 30 plus years, we've only had good years.
Right.
And so, while it makes sense for the growth of the economy to normalize, it takes an effort by consumers to process the fact that you cannot expect your real estate asset to grow in value by 10 to 20% every year. In 2016 in Shanghai, if you bought an apartment in January, in December, that apartment was worth 50% more. Wow. Okay. So there's an element of, let's get back to reality. After extraordinary growth for the last 30 years, the economy is normalizing. We're still an economy in China that's growing at 4 to 5%, which is far above, North America or Europe. Aside from India, I don't know that there's another country in the world that's growing at that pace, at least not a significant economy. And I think consumers are going to need time to integrate the fact that they're now in a mature economy, and mature economies don't just have good years.
Right.
Once that process has taken place in the mind of consumers, I would expect them to regain some confidence based on more realistic economic expectation for themselves and for the country. And as a result, resume consuming luxury at a higher rate than they did in 2024.
I think that's an important point. I think that's really important to frame it like that. Managed expectations and a more realistic outlook.
Yeah. Now, if you look at 2025, and more on a immediate term focus, not much has changed versus 12 months ago from an economic environment standpoint. Some would say that the real estate in China is stabilizing. Okay, that's yet to be demonstrated in a sustainable way. Okay, but overall, the consumer confidence is at the same level it was 12 months ago. And if the environment is the same, that means that if brands want to have a better performance in 2025, they're going to have a different approach to the market in 2025. Otherwise, it's same environment, same approach leads to the same outcome. Mm-hmm. And so the question becomes, what can we expect in 2025? And on our side at Digital Luxury Group, we believe that brands have to be very, very prudent in terms of their expectation for 2025. And when we talk to luxury brands, a lot of them are telling us that they're not optimistic about China in 2025. I think the devil is in the detail, because the question is, when you say you're not optimistic about China in 2025, do you mean that you don't expect any growth versus 2024? Or do you mean that you expect a similar contraction as the one you experienced in 2024? And I think the truth is somewhere in between. I continue to expect a contraction in 2025, not of the 21% we saw domestically in China, not of 13% that we saw in global Chinese luxury expenditure, but we're still in a context where nothing has changed radically enough for us to expect radically different and better results.
Yeah, I think that's a very realistic outlook. I think everybody was hoping that 2025 things would turn around, but I believe in a very broad sense, not just luxury, that 2025 will be somewhat of a slower year. How slow will be interesting to see. But I think that's really a very interesting perspective that you've brought on understanding China luxury, because people are looking at it probably as more dire than what you have been sharing with us. And I appreciate the fact that you've given us that insight.
Thank you very much, Jane. You're being very kind. I think, one of the important things to focus on is what can brands do about it. And, if you think about the European market or the American market, these are markets that have, for the last 30, 40, 50 years, never had the benefit of experiencing, double-digit sustained growth. And so a lot of the focus in Europe and North America, in luxury and outside the luxury industry, has always been on optimization,
right?
On making sure you use the best tools, on making sure you never leave money on the table. And so there's this obsession of constantly optimizing. And I think this is something that's not necessarily the case in China. And in the work that I do, very often you realize that especially global brands operating in China have, for the last 20 years, benefited from the growth of the market, the growth of the Chinese middle class in particular, and have never had to really focus on optimization. And today, and going forward in 2025, I'm seeing a lot of conversations taking place around, if we can't get more revenue, or if we can't get a better economy, or if we can't get a performance fueled by the growth of the market, then we're going to have to outperform the market. And to outperform the market, you have to do better than your competitors. And to do better than your competitors, you're going to have to challenge the way you do things today to find better ways, which is very much in the DNA of how companies work outside China, not necessarily in China. And especially when it comes to the Chinese digital ecosystem.
Right. That's an important point.
Because for store operation, at the end of the day, when you go to a store in Shanghai or in Dubai or in London or in Paris or in New York, you have the same store, the same environment, the same product, almost the same price as we were discussing earlier, and a very, very similar experience. We're no longer at a stage where you can say the experience in Shanghai is not as good as the experience in Paris, London, Dubai, etc. But when it comes to the Chinese digital ecosystem, for a long time, headquarters have not exercised the kind of control and active involvement into making sure that the way the brands are being presented is consistent with how the brand should be presented. And at the end of the day, what all good luxury brands and all good global companies have in common is that they have developed very systematic and consistent way of doing things. And that's true everywhere, except in the Chinese digital ecosystem.
Yes.
Where you see things that are not consistent with what luxury brands should sometimes do.
So how do you see that impacting the brand? I mean, in many cases, a lot of things are done to drive short-term sales, not just with luxury brands in China, but for everybody. And oftentimes that can have a very long-term negative impact. What are you seeing around that?
Well, a good example is how brands have leveraged Tmall.
Okay.
Tmall is the largest e-commerce platform in the world, and of course in China as well. They've been losing market shares to JD and to Douyin/TikTok. But at the end of the day, they are the number one and largest e-commerce marketplace in China. When luxury brands joined Tmall, when they decided to open their own flagship stores inside the Tmall ecosystem, they were going very much in the same direction as the direction that Tmall was pursuing, which was providing consumers with more brands and inviting consumers into the brand universe of all these new brands, both foreign and domestic. Because of the competition that Tmall is under, that Tmall is facing, they have refocused their priority on delivering the best value possible, which means that they're going into a direction that is far more focused on discount, value, promotion, which obviously is the opposite direction that any luxury brands should want to go to. And so as a result, luxury brands now can no longer be a passenger on the Tmall journey. They have to drive their own Tmall flagship store in the direction that matches their overall global luxury strategy. And so that implies not participating in promotions. That implies not discounting on Tmall. That implies continuing to focus on presenting the brand universe. And it's very interesting because, I'm starting to have conversations with global luxury headquarters that are talking to us about, based on what we're hearing and reading about Tmall, does it still make sense for a luxury brand to be on Tmall? And my answer is absolutely, because your presence on Tmall serves not just the purpose of generating e-commerce revenue, right, but first and foremost is an opportunity for the Chinese consumers to be exposed to your brand universe. Right. And the reality is, we know that for luxury brands, for most of them, Tmall represents 5% of their revenue at most. Right. The other 95% is taking place offline in China. And 80% of those 95% offline customers do go on Tmall as part of their consumer, journey decision process to learn about the brand. And so that's why it's critical to have a presence on Tmall, more for marketing purposes than for revenue generation. And so I think there's a lot of, that's just one example of how the Chinese digital ecosystem, because it's unique, needs to be very well understood by global headquarters in order to make sure that global headquarters are providing their local teams in China with the right rules and guidelines in terms of how to operate their luxury brand. Because you're talking about, when you talk about Tmall, for example, you're talking about an app on your phone that most people can't access outside China.
Right.
And so when you're the CEO of a luxury brand in Europe, you're not micromanaging your Instagram presence, but you can go on Instagram and look at the account of your brand. And if something doesn't look right, it's going to be corrected very quickly. But if you never go on Tmall, that's a big blind spot, especially when going back to an earlier point. Tmall, at the end of the day, is the largest consumer touch point for most luxury brands in China, if not in the world, in terms of the number of eyeballs that are, captured on Tmall versus across all your other touch points, online and offline.
I think that's a really important point, and I think that it's something that you're right. It's a blind spot that people have. It's very difficult when you're in a new market. Not that China's a new market per se, but it's newer than a lot of the developed markets. It's difficult for people who are not in China to truly understand, like you're saying, the nuances of how things work in that market. What are the levers that you need to pull, and why things might work differently, but they work in their own unique way.
Absolutely. That's I'm absolutely convinced that for many brands at the headquarter level, the Chinese digital ecosystem remains a blind spot.
Yeah, I would totally agree with you on that. Jacques, you've shared so many interesting things with us. I want to thank you so much for taking the time to join us here on A Seat at the Table. I've learned a tremendous amount talking to you here, and I'm sure that everybody who is listening to this podcast in 142 countries has probably found it equally as important.
Well, thank you very much, Jane. I enjoyed the conversation, and I'm looking forward to having the opportunity to speak with you again at a later time.
Absolutely. The China market's very important, and we will be continuing to cover it and to try to understand how luxury brands, mid-tier, and even mass market brands can grow their presence in China.